Hi everyone, today let's start off with the Fed minutes, then we'll touch on target earnings and the economic data, then we'll get into the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the Fed minutes, you can see they see some upside risk in inflation. We've been talking about this for a while. We said energy was going higher and we thought that that might be triggering some upside moves in prices, but we have not seen that yet. Doesn't mean that the Fed officials are not worried about it. It is certainly a possibility. Typically, we don't see inflation go down in a straight line. Usually it's a little bit jagged. We see some pullbacks, and that hasn't happened yet, which is a little bit concerning, to be honest. They also increased the target rate from 5.25 to 5.5, which is the highest in more than 22 years. The question is, are we going to go higher? And it doesn't seem like the Fed officials know quite yet. They say there's a lot of uncertainty and inflation is unacceptably high still, meaning that we're still going to maintain higher for longer, which is what they've been signaling to the markets for a while. But right now, the markets are not pricing in any additional rate hikes this year. We're expecting a pause in September. And I saw some other articles that mentioned that some Fed officials did actually want to pause in July despite giving us the hike, which momentarily sent the markets higher in the afternoon session. So based on all of that, we don't really know exactly what's going to happen. And this did not really generate any more clarity, and uncertainty usually leads to lower prices in the market. They also mentioned that GDP gains as well as unemployment have been better than expectations. GDP above 2% for the first half of 2023, which is still quite good. And then unemployment sitting down at 3.5 basically gives no reason for the Fed to start pulling back or cutting rates. Everything still looks good in the overall economy. They're not seeing any major reasons to cut yet. Next up, we got target earnings. They've been under fire a little bit. Similar to Bud Light, they were putting out some things that people didn't like, and they were getting in that same boycott, so they started to see some falling sales, and they do highlight that here. Backlash from the Pride Month contributed to weaker sales. They still managed to beat on earnings, and they did raise their forward guidance, so they're now expecting $7.75 up to $8.75 for the full year earnings. And if you look at this quarter, you can see they beat by quite a bit, $1.80 versus $1.39. You can see that miss on revenue here, missing by nearly $500 million. They did extremely well during COVID and they shot up quite a lot. Since then, they have moved much, much lower due to some mismanagement in inventories. We did talk about that on this channel a long time ago. And they're still kind of recovering from that. And this quarter is not really going to break that cycle. And looking at the chart here, you can see what I was talking about. Did really, really well during 2021, kind of topped out, created that lower high in April of 22, and then fell all the way from about $250 back into that $150 range. You can see now we're down at $125, so we've fallen more than 50% from the highs. And then looking at some comps here, you can see sales declined 4.3%. for stores, and then digital sales dropped 10.5%. So not looking super great for Target right now. Moving over to the economic calendar, you can see GDP for the Eurozone came in at expectations, building permits slightly lower than expectations, and then we already talked about the Fed minutes in the afternoon. Looking at tomorrow, we have initial jobless claims. Previous read was 248. That was higher than expectations. We're expected to step down just slightly, which is interesting. And it will definitely be interesting if we come in better than expectations. We talked about how unemployment has been pretty low, and that is currently allowing the Fed to keep rates higher for longer. If we start to see this tick up, that could be interesting, but we haven't seen it yet. And then we have the Fed balance sheet. I think this could be interesting tomorrow afternoon. If the Fed is starting to pump a little bit of liquidity into the markets with the recent dip, that could indicate a potential rally to come, so something to watch for tomorrow's news. For tomorrow's earnings, we have Walmart, that's the big one, pre-market, Ross, after hours. You also have Lenovo, fairly interesting, and that's just about it for tomorrow. Moving over to Max Pain for the end of the week. You can see this has shifted quite dramatically once again. Max Pain now at 435. You can see a big put wall at 430, decent put wall here at 440, which is basically right where we're hovering right now. Max pain is now down here between these two marks. 450 was always the call wall. We didn't expect to get above there. We were talking about a close between 440 and 450. That seems a little bit less likely now with max pain moving lower. Put call ratio moved down as well, down to 1.8. And this looks a little bit more bearish now, looking for a close between 430 and 440. Moving over to the charts, starting off with the S&Ps here on the hour and the 4 hour. No big change. We moved much lower yesterday. We moved much lower again today, hitting that trend line. Got below my level at that 440 zone. The question is, are we going to kind of pop above this and hold? That would be interesting. We broke this trend line, retested that level, pulled back. Everything looks pretty weak still. All of the EMAs and SMAs still in line on the hourly chart. Everything looks weak. Looking at the 4 hour, you can see we're below all the EMAs and SMAs by quite a lot now. Definitely an interesting zone in that 440 area, as well as the trend line that we were watching. Clearly interesting. Max pain sitting down here in this 430 area, right in the middle of this previous consolidation. You can see that highly traded zone right there as well. That would indicate about another 1% down move for this week, which would be pretty aggressive. At this point, from the highs, we've moved down right around 4.5% or so. If we were to get that max pain close, that would be around 4.75 down to maybe 5%. Definitely interesting. Otherwise, everything still looks super bearish. Momentum, RSI looking super bearish. It is worth noting that we got to oversold conditions for the first time here on the 4 hour chart. Hit a 29 on the RSI on that last candle of the day, marking some oversold conditions. The last time that we got oversold conditions was all the way back here in March of 23. And you can see that here, March of 23, right in mid-March, which ended up leading to a massive rally. So obviously much different conditions, but it is worth noting that oversold conditions on the 4 hour chart can lead to some pretty good indicators to buy, and it is something worth watching. Moving over to the NASDAQ on the hour and the 4 hour, you can see we sold off once again. Very similar to the SPY in terms of chart structure. Below all the EMAs and SMAs, all in line. We're also at that trend line here. We did not hit oversold conditions on the 4 hour chart. Got down to 32.74, so not quite as oversold. We talked about the NASDAQ being a little bit stronger, fairly interesting. We are in this zone here now, 364.84 down to 360.44, right in the middle of that range. And you can see that was a clear consolidation, just like the SPY, same zone. Overall, everything's still looking bearish, just like the SPY. Moving over to the Russell and the Dow, similar thesis on the Russell, moving lower, kind of accelerated, getting very close to the trend line down at 185.14. That would be interesting. You can see how that marked some lows here going back to July, as well as a top here in May. If we hit that level and it holds, that could be a nice little indicator to buy. We're down around 6.75% or so from this most recent high. If we set up a higher low versus this previous low, that could indicate a potential run. Definitely interesting zone. Super oversold here on the 4 hour chart. Got all the way down to a 23 on the RSI. Not great. Doesn't mean we're going to flip around right away, but it does indicate the aggressiveness of this down move. Similarly, on the Dow, you can see this previous consolidation. We got the breakdown, tested it one more time here today, and then broke down all the way to the next level, 347.67. Bounced a little bit after hours, but this still looks weak. Got the 200 sitting at 345.97, and my next level is 345.24. Moving over to copper divided by gold. Typically down moves in this ratio means down moves in the markets. And sure enough, we've been selling off here looking at the daily chart. We're below all the EMAs and SMAs, looks weak. We kind of rallied into the zone, consolidated, broke this level at 1927, moving lower down into this 1830 area, which marked this previous low here. Momentum still bearish. Definitely something to watch. If we end up getting a step down on momentum here, that could indicate a potential higher low setup. Something to watch going into tomorrow's session. Moving over to Tesla and Apple. Apple still holding in the zone, but did sell off a little bit more today. Hit my levels, 176.15, held right there. You can see lots of trading has happened in this zone, which is interesting. Potentially some people exiting some shorts, looking for a little bit of a rally, or potentially entering some longs after the sell-off here. Definitely interesting. Tesla continues to accelerate to the downside. We talked about that yesterday being the case. Looked like it was picking up, pushed through this level, and it does look like it's accelerating down to 214, which is my next level. Moving over to staples and discretionary. Staples tried to rally, hit VWAP, sold off, took out the trend. This looks weaker now. Looking at 72.50 for the next level. Discretionary also selling off, also accelerating, probably due to Tesla. Took out my price target as we expected. Now we're looking at 162-ish for the next level of support. Moving over to transports just for a moment, you can see here on the daily chart we hit that 55 EMA. Talked about that yesterday, took out the level, hit the EMA. It's currently holding in that zone on a closing basis. If it holds here, we start to see a rally. That could be interesting. But right now, everything still looks super bearish. We're oversold on the hourly chart, but not quite there yet on the daily. Moving over to the 50-day and 200-day averages, you can see the 50-day hit that 40 level almost to the penny. It's holding right there, which is interesting. We're super oversold here now. We were oversold yesterday, continue to get more oversold down to 23.24 on RSI. Definitely interesting. If it starts to set up a little bit of a base here, we could argue for at least a little bit of a pullback. It is pretty extended now. 200 SMA showing similar things. We hit that 200 candle break, continuation. Didn't quite get down to 52, which is interesting. I would expect to hit that level before we see any kind of reversal. Momentum still bearish. RSI not quite oversold yet, but if we get another candle like this, we will definitely hit oversold conditions. Moving over to the 2-year and the 10-year. 2-year holding right below that 5% level. 10-year rallying, getting above 4.25. You can see we're above these previous closes, so that's a new high close here recently. If this continues to rally and take out these wicks, that could be a pretty bearish indicator. Yields going higher is generally bad for markets. Moving over to the dollar on the 4-hour and the daily. Dollar broke out above this trend line. We've had this before, held above it just for a little bit and then broke back down, so it doesn't mean that this is going to break out super strong. We did get above the 200 on the daily chart, which is interesting. Still not above 103.64. That's my next level for resistance. You can also see we're not above these previous highs here before we had that bigger breakdown. Momentum is still bullish. We're not overbought yet on the daily chart, so it could certainly go a little bit higher before we see any kind of pullback. If we overthrow here and then we break back down through this structure, that could be a big indicator of lower levels to come on the dollar. But right now, everything is still quite bullish looking. Moving over to high yields as well as TLT. Both of these sold off. High yields making new lows once again. TLT breaking down below all the EMAs and SMAs, looking for that 91 level. Momentum bearish, big volume here today, way bigger than these previous candles. So everything moving lower, looking more bearish on bonds. Moving over to the volatility indices, move index kind of sold off a little, which was interesting. I kind of thought we would rally with the move down on bonds, but it didn't quite happen that way. We're still in this zone, in this triangle. VIX, on the other hand, did get a new high close, threw a wick to the 9, rallied a little bit. Honestly, this is not showing us that much yet. You want to see a bigger spike, get above the 144, start to do some more stuff here. But this move down has actually been quite gradual, a little bit faster on some stocks than others, but the major indices are not that far off of their highs. And if we don't see a little bit of an acceleration, I would expect the VIX to kind of hold in this zone. Moving over to my accounts, you can see I added a little bit more money. I was still down around $200, but I added some more money here, and you can see my new totals. In terms of positions, I continue to roll out and down on these puts on the IWM down to 186, and you can see it's starting to catch up with my puts, which is not what you want to see. I'll continue to roll out and down as I need to, but I'm all the way out to Monday at this point, which is not what I wanted. But the IWM has kind of forced my hand to the downside. Qs, on the other hand, I continue to play some defense, make quite a bit of money on calls, protecting myself quite well. I still own those 200 shares. You can see my loss on those shares was 776, but my actual loss on the day was only 217. So continuing to shelter myself from most of those losses with all of these call positions. Going into tomorrow, I have some 363 calls, already showing profits, 368 calls for tomorrow as well. And then 2 days out, I have some 367s for $1, selling lots of calls to protect my positions. And then I also rolled out and down on these 362 puts. You can see I continue to collect some credits, so my actual buy price now is down at 359.50 or so, which is quite a bit below current prices. But again, I'm already out to Monday. That's a little further than I wanted to be. But in terms of credit and break-even price, I'm still doing okay. Overall, in terms of direction, everything is still looking quite bearish, and I do expect things to go lower tomorrow. I don't think we've quite seen the full capitulation quite yet, but it does seem like it's going to be getting pretty close. Let me know down in the comment section what you thought of the Fed minutes or target earnings. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.